to kind of set the table, right? These From the Trenches episodes. We want to be responsive to the feedback we're getting. We received a flood of questions from a recent episode regarding pension commencement lump sum.
We operate in the cross-border space. A lot of what we cover is governed by the US-UK tax treaty, or tax treaties, because there's also there's other treaties, but essentially it's governed by treaties, and treaties can be ambiguous. There can be different interpretations. There are different interpretations.
Knowing that we exist in this ambiguous world of tax treaty interpretations with different opinions from different advisors and different approaches, how can we manage this efficiently in the right way such that you're protected to the extent you can be?
Welcome to Expat Wealth, a Plan First Wealth podcast dedicated to helping ambitious expatriates in America and Americans overseas thrive. I'm your host, Richard Taylor, and Plan First Wealth is the business I founded and run today, and we work with successful expatriates, immigrants, and internationally minded Americans to make the most of their opportunity and avoid the expat landmines. First, a quick disclaimer. While Plan First Wealth LLC is an SEC-registered investment advisor, the views and opinions expressed in this program are those of the speakers and do not necessarily reflect the views and positions of Plan First Wealth. Information presented is for educational purposes only. Now, if you aren't already receiving our emails, please go to our website, www.planfirstwealth.com, and sign up there. It's free, and you'll be notified every time we drop a new episode, and so much more. Okay, let's get back to this week's show. Welcome back to another From the Trenches, the show where James and I get together and bring you behind the scenes, behind the curtain at Plan First Wealth as we grow this business and work with our clients. Hi, James.
How's it going, Rich?
Mostly good. This is the week of the massive snowstorm. Mm-hmm. So I've spent the week basically digging myself and my house out of snow. First of all, it was just getting the drive clear, and then it was like starting to panic about the amount of snow that's covering, that when it starts to melt will inevitably find its way into my basement.
Do you find that I find shoveling gratifying to start, and then the third or fourth go around, you're like, this is not fun.
Yeah, exactly that. It gets tiresome and exhausting very, very quickly. And this was a phenomenal amount of snow. I've never seen anything like it. It's so cold. Right, okay, what are we going to get to today? We have quite a lot on the docket here, James.
We do. To kind of set the table, right, these From the Trenches episodes, we want to be responsive to the feedback we're getting from our audience, from our clients, from prospective clients, from people we talk with. And we received a flood of questions from a recent episode, specifically a recent episode with a tax advisor regarding pension commencement lump sum, right? That 25% that in the UK, we all know you can take out tax-free in the UK. So when we get a flood of questions, and when they're ranging in sort of intent and candor and confusion and bewilderment, we want to use this platform to address that and to provide clarity how we can.
We operate in the cross-border space. A lot of what we cover is governed by the US-UK tax treaty, or tax treaties, because there's also there's other treaties, but essentially it's governed by treaties, and treaties can be ambiguous. There can be different interpretations. There are different interpretations. And this PCLS issue, this 25% lump sum, is a very emotive one for people with UK pensions, particularly British expats with UK pensions. And there are different opinions out there. There are tax advisors who consider it to be taxable, no matter what. There are tax advisors who consider it to be tax-free in the US, no matter what. And then the episode you're referring to is one I had on recently where he said, look, I believe it's taxable when it's taken as a lump sum, but there may be a case to be made that if you take it as a periodic payment, you can make a case for it. And we've had nearly all of these views represented on the podcast. Very soon, the next expat is someone who says, I believe it's taxable no matter what. So we've had 3 different tax professionals come on and say 3 slightly different things. And every time someone comes on, we get people reach out to us and say, oh, so this is what you think now. And no, we're not tax advisors. I don't think anything on this. I've never submitted my own tax return. I don't ever intend to. I've got a heightened awareness of all the issues, obviously, but I just know there's different opinions. I am not a tax expert enough, personally, but certainly not professionally, to come down one way or the other. We're bringing people on to expose these different viewpoints and to impress upon people that these different viewpoints exist and how important it is to go and get professional advice. Find someone you want to work with, find someone who's going to help you navigate this and make an informed decision.
Yep, absolutely.
So that same episode, I had someone else reach out to me, and I actually think they'd responded to the email that we send out. So they hadn't, I don't think they'd listened to it yet. So what I'm about to say might, if they're listening, this might sound a bit unfair, but I'm trying to make a wider point. So the email, we referred to pension reporting, the different forms you have to submit when you have UK pensions, and they often differ between whether you have an old style personal pension and a SIP. And this person, who's extremely knowledgeable, extremely engaged, had written to me saying, "Oh, so now you think 35? Are you saying now 3520? This particular form doesn't apply for a SIP?" And essentially, that's absolutely not what I'd said at all. And maybe if this person listened to the podcast, they would have picked up what we were really saying. But it just really brought home to light for me. Like, this is someone who's super engaged, super educated, super knowledgeable, is looking for answers, and has read something, maybe off the cuff, but has read something, put two together and got 5. We hark on about not DIYing your own taxes in America for expats. I will always bang on this message, but that was such a prime example of how you can be looking for all the answers, and you can actually have the different pieces of the jigsaw, but not put the jigsaw together correctly. And do you know what? A lot of tax advisors don't even put the jigsaw together properly. But at least if you have a tax advisor, if it ever becomes an issue, you can say, "Look, I work with a cross-border tax advisor. I follow their advice. What more can I do?" And that is a solid defense. That's a solid argument.
It's one of those things where it kind of circles back to that same point, right? Like you said, that this person is looking for answers, is engaged, is doing the research. It is so easy to make a misstep that you won't know until retrospect, right? And then those mistakes can be costly. We know that the U.S. system is punitive and complex and draconian. You want to do what you can to protect yourself up front, right? However that means. Certainly for our audience who is heading into retirement, and we'd say this a lot as well, you don't want that hanging over you, right? We do not want that threat.
Imagine, I mean, I don't think this has happened in this case, but just imagine if this particular person thought, "Oh, right, yeah, now Plan First Wealth have said I don't need to do 3520s for my SIP," which is not what we said in the podcast or on the email. And then going forward, they started doing an 8938 themselves instead. That could well become a problem at some point in the future, an expensive problem.
We want to get the point across that we empathize, right? It makes our jobs harder too. This level of complication, of complexity. We understand why people want direct, clear, unambiguous answers. It's not there, right? So how can we manage it in the right way? I understand why people get frustrated sometimes or think, why isn't this clear? Yeah, it's tough.
Why is this so complicated? Why are there so many forms? Why are the penalties so high? I just want to, a few minutes ago, I said I'd never submitted a tax return. What I meant was I never prepared my own tax return and submitted my own tax return. I just want to be very clear, everyone. Every year I've been here, I have submitted through a tax advisor, a cross-border tax advisor, I have submitted timely filed tax returns. Just I haven't prepared them or submitted them myself.
You want to make sure that's clear to whoever might be listening.
Absolutely.
And, to underline that point, it's probably worth saying too, and you'll hear us say this, we're not tax advisors, right? We are SEC regulated, registered investment advisors. We cannot give tax advice. So it's a matter of getting in the right experts who can help you with this.
Yes. Right. On that note, you mentioned before punitive penalties and repercussions for getting it wrong. We did a webinar yesterday, and afterwards we got an email from a client who said, "Guys, thanks. A really engaged client. I've not actually met this client, but you tell me, great guy. Basically said, look, you might want to consider not scaremongering." That was the actual language, right?
No, it wasn't. Let me say a couple of things because it really enjoy working with this client. He's always engaged, very proactive too, which we're gonna touch on here. We've gotten this feedback a few times, right? This is just the most recent, but we've heard this from a couple clients in the past. So I don't mean to call anyone out, but it is something we take on board.
Well, this is why I wanted to bring this specific example up, because this is from a friend.
Right.
This is from someone who we have a relationship, we have a good relationship with, who trusts us and we trust them, who knows us and we know them, who is coming at this from a supportive place. So yeah, I don't want to think, I don't. Please do not for one second think I'm calling someone out in a negative way here. I'm saying I want to talk about this for a few reasons, but often it's easy to dismiss this feedback because it doesn't come from a friend. But because this came from a friend, it's been on my mind, and I wanted to, and I didn't want to just dismiss it as someone who doesn't like hearing what we're saying and wants to bury their head in the sand. This is not that person. This is not that person. Absolutely, this is coming from a friend. So I've reflected on this for the past 24 hours. And because I think it's super important that I don't dismiss it, and I don't want to be that guy. We don't scaremonger for the sake of drumming up business. We don't need to. And I've thought about this, right? And I have come to the conclusion, and I hope I'm not, I hope this isn't just me deceiving myself, but I don't think I would change anything, because I truly do not think we are scaremongering. And the problem is, well, first of all, it was a 7 tax nightmare, so it was always going to have, it was always going to be inclined towards stuff that can blow up. But I've been doing this for 10 years here now, and I have read and heard about everything that we talk about, all the worst case scenarios. But more importantly, I have seen them. I have seen it happen. We have spoken to many, many people, not necessarily clients, but many, many people who have suffered the negative consequences we're talking about. So I know it does happen. I also know there's lots and lots of ways around it. Usually they're not completely free, but there's usually ways around it. But it happened. And I think because the repercussions that we refer to are so draconian, are so completely out of whack with the misdeed, the oversight, especially what we're used to from the UK and Europe. People just assume that we are being extreme, but we're not. And I think that the best way to get a handle on that is to listen to the podcast, because with the podcast we have guests on, experts, tax advisors, estate planning attorneys, and they are the ones who come and talk about this. Essentially, in our webinars, a lot of the time, we are repeating what we've learned from other experts. So you all you have to do is go and listen to actual tax advisors who deal with this day in, day out, actual tax advisors who are helping people come into compliance. These are the people at the coalface. And I don't think they're scaremongering. I'm excited to announce that Expat Wealth has its first sponsor, the Global Financial Planning Institute. The GFPI exists to provide education, community, tools, resources, and ongoing research for financial planners and other advanced financial professionals working with international and cross-border clients in the US and Americans abroad. I'm a GFP Institute Fellow, and I've put all our employees through their GFPI programs when they join us. I've met some great people. I've learned a ton. It's a genuine community of internationally minded folk doing their best to serve their clients properly and, critically, sharing what they know in the oftentimes challenging and ambiguous US cross-border environment. And as anyone in this sector will tell you, you're always learning. So if you work with international clients and or Americans abroad, or if this is an area you're looking to get into, check out the GFPI at www.gfp.institute. You will be glad you did, and I hope to see you there soon.
Leaving the idea of kind of scaremongering behind, if the experts are recommending an approach or recommending caution or recommending that you are really careful with filing and reporting compliance and taking treaty positions, we want people to listen to them, right? We're fiduciaries. We obviously have to place our clients' best interest before our own. And if we didn't bring these issues to light, we would be remiss, I feel, in our duties. So it's unfortunate that the punitive, draconian nature of the U.S. tax system, but the reality is that that's how it is, and we need to shed light on that.
Mm-hmm. Absolutely. While we're at it, I just want to shout out Simon on YouTube. I saw you comment, Simon, under one of our videos with Brian Dunhill. You said you think people tend to overthink FX when it comes to managing equities. And I just want to say I completely agree with you.
100% agree.
I 100% agree with you, Simon. They do.
We could do a whole episode on currency and FX, but yes, we agree, and it's a great point.
Yeah. Right, should we just talk about what's going on in the world right now? In US held interest rates yesterday.
Mm-hmm. Yep, slightly more hawkish, I think. Right there, seems like the Fed is really looking for softness in the labor market before they'll move, which will be interesting to see.
Yeah, I mean, I've got to tell you, I think this. I'm no PhD economist, but this seems sensible to me. Inflation's at 2.7, but there are questions about the quality of the data given the shutdown last year. Economy's pretty robust. There's a lot going on right now, particularly in currencies, but it's pretty robust. Inflation's still a concern. I mean, we're not. Interest rates aren't high. They're also not low. They're signaling that they don't think they're going to go up. They're either going to stay where they are or may go down. It just seems eminently sensible.
It's sort of calm right now, as absurd as that sounds, maybe politically, but from the Fed's perspective, things are calm. You know, there are some what I would call things to watch. Right, the Conference Board survey for the labor market has really tanked. So, if I could steal a term from Gen Z, the vibes are off.
Yeah.
It feels like the job market's getting tougher. Of course, anecdotally, you'll see headlines from the big companies, right? Amazon announced layoffs. That generates interest. But overall, right now, as things stand, it seems fairly calm out there.
The topic of the moment, other than gold, is currency. You know, the dollar is sliding.
Mm-hmm.
This administration has shown signs in the past that it welcomes a weaker dollar, but there's limits to that. There's absolute limits to that. So I'm not hugely concerned. And also, a weaker dollar would often mean you'd expect the stock market to perform well because all the foreign currencies, foreign income earned, gets translated into more dollars. So it swings and roundabouts.
And we've kind of seen that, right? I mean, don't have to get too far into earnings, but Meta up 9%, I think, on a solid earnings beat. Commitment to ramp up AI spending. S&P crested over 7,000 for the first time. I mean, The party goes on, right, until it doesn't. And you want to have a plan in place for inevitably when that turns. But as it is right now, we're doing okay. The markets.
Yeah. And we're going to have a new Fed chair soon. That's happening imminently, right? The next
Coming up soon,
months.
yeah. Yep.
Yeah, I've been worried about who that could be, but apparently Rick Reeder, a very famous and well-respected bond trader manager, is a fixed income manager, is in the mix. He's a serious guy, so I think that's quite encouraging. So yeah, things are okay. Markets wise, economy wise,
we're trying to really
okay.
strain to say that we are talking specifically about the markets, finance.
Yes,
like
yeah. All right. Anything else to you want to add to this before we move on to
pick and mix? No, that's good.
You go first. What are you reading at the moment?
So let's see. Dark, cold months in January, freezing, dark all the time. If you're looking for a nice light pick me up, I just wrapped up a book called Empire of Pain by writer Patrick Radden Keefe. Goes into the opioid crisis, the opioid epidemic over the last 40, 50 years. Really, as you can imagine.
40 or 50 years.
Yeah. Wow. The Sackler family, who have a big focus of the book is how they've sort of distanced themselves intentionally for many, many years. They, if you could say, got away with it. So I'm being facetious, not exactly light reading, but an incredibly well-researched, engaging book, Empire of Pain. I think they had made a mini-series.
Is that the one with Michael Keaton?
Yes. I haven't watched it. Yeah, I've heard it's really good. It feels like that'd be two really depressing experiences back to back. So I've held off on watching the show. But that's what I'm reading right now.
The amount of lives that the opioid has ruined, individual lives and family lives, is staggering.
And just the political whether it's incompetence, negligence, outright corruption that allow that to unfold the way it did is staggering. And you're talking about multiple generations of a family that reaped incredible amounts of wealth, kind of like Succession. It reads like Succession a while, but
well, I've read a few books since we last spoke. I read 1929 by Alex Ross.
Andrew Ross
Sorkin.
Yeah.
Andrew Ross Sorkin, thank you. He is just a super, super impressive guy.
I've been meaning.
He really is.
Yeah.
He's a guy who wrote Too Big to Fail, which is an amazing book. Too Big to Fail, its opening paragraph is the ex-CEO of Lehman leaving his Greenwich home. And at the time, I'd lived in Greenwich, and it was just a full circle moment for me going, when this all kicked off, I was living in Manchester, working for Scottish Widows, and then this thing blew up the world, and now I'm reading a book about this, the book about this whole saga, and it opens in a street on Greenwich, in the town I now live in. Like, what life is crazy.
Wow.
But he's a super impressive guy, and I wanted to read this book partly because he wrote it, and also partly because this came out at the time when everyone was screaming about AI bubble. It's calmed down a lot now, which really does give you a sense that we just moved from one manufactured trade. I'm not saying there's not an AI bubble, but it's all we talked about at the end of last year, and now it's all gold and macro political, and and it'll be something else, and FX, and in 3 months' time it's going to be something else. Mm-hmm. And they're all legitimate, but we all get so worked up in the moment. We all get ourselves into a lather. But anyway, it was the AI bubble, and I wanted to understand the parallels between 1929 because everyone's so scared of the next Great Depression. And it was a great read. It was really interesting, fantastically well written and researched. And I came away thinking, we're not going to have another 1929 Great Depression that follows. It's very, very different. There was no SEC. Insider trading was not only illegal, it was basically how the rich people made money. They formed pods. Insider traded like crazy. It was just a complete free for all. Leverage was absolutely out of control. Like, it makes what we're doing now look like nothing. Like, people were levered up like 10 times, 20 times, 30 times. It was completely insane. And it's very, very, very different now.
It was like the Wild West.
Well, shock horror, we have learned an awful lot in 100 years and multiple crashes. And that led me into another book about I can't remember the exact name. It's like the history of markets in 5 crashes, something like that. Mm-hmm. And it is the Great Depression. It's 1987. I think there's one in the 60s. It's the GFC. It's the Greek crisis of 2012. Again, really interesting. It just shows you every time it's different. There are lots of similarities, and we learn, and we have come a long way. And the next one, there will be a next one, and the next one. But I do think we have learned a lot along the way. So they were both quite encouraging and educational and interesting. And then I switched gears, and I just finished a book on John Lennon and Paul McCartney, songwriting partnership, friendship, and it's a fantastic. I read several books on the Beatles, but this was slightly different in that each chapter is a song, starting from super early right until John Lennon's death, and you learn a lot about their songwriting and their relationship and the Beatles, and that was just a really great read.
What was the title of that one?
John and Paul: A Love Story in Songs by Ian Leslie. I highly recommend that book. Anyone who's interested in the Beatles, and I absolutely love the Beatles. And the older I get, the more I love them. It's a really great book. What are you watching at the moment?
We caught up on Slow Horses, season 5.
So
I think
good.
we're behind on that. It's so good. I guess this season, I was chatting with my wife about it afterwards. Maybe not the strongest season, but I would say pound for pound, it's one of the most entertaining shows on television. It's just like the characters are incredible. Gary Oldman is putting on the performance of a lifetime and seems to be having a blast doing it. So it's just amazing how consistent they are. And we actually saw, for our audience, this might land, we saw a British comedian, James Acaster, live in Philly last weekend. Yeah, it was unbelievable. I won't spoil any of the show because it's a new tour. He's touring North America. He's going back to the UK. Second time we saw him in Philly. We saw him a couple years ago. Tickets were $25. Tickets this time were $225.
Oh.
So his profile in the States is rapidly expanding, which costs us, but we're happy to see happy to see his continued success. We had an absolute blast. If you get a chance to see him in North America or the UK, I would highly recommend it.
Okay. We just finished Heated Rivalry. You heard this show?
My wife is watching that right now. No, I haven't. I missed that one.
So we watched all the hype. So after a couple of episodes, I was like, this seems to be more hype. It was just a love story. Mm-hmm. And I was kind of a bit underwhelmed, but then the second half I thought was great because I was trying to understand why I thought it was so great, and it was because I was listening to another podcast where someone was talking about it, Pivot, and he said it was because you're always waiting for the bad stuff to happen. You're waiting for the homophobia to come out. You're waiting for someone to get shunned or beaten up or rejected, and it never happens.
And it's sort of uplifting, like in that way.
Yeah, and that was when it went from like humdrum to actually I really enjoyed this because of that. And ironically, if you were writing out beforehand, you'd think, the lack of the drama. You'd want almost for a drama series, you'd want drama, but it's almost a lack of the drama that made it so fulfilling and uplifting. So I actually went from being kind of underwhelmed to thoroughly enjoying that show. Right, James, I have to go to the doctor now. So we've brought this recording forward. Thank you, because I think I broke my finger skiing and left it for 4 weeks, hoping it was a sprain. It's not. So
ran into a tree? Is that? Do I have that right?
Yeah. There's just a tree I wanted to give it
like a Wile E. Coyote sort of just bash right into.
I was out of my depth in the trees. My skis were too long. Whatever. I've got many excuses. Ultimately, though, I slammed my finger into a tree, and 4 weeks later, I can't straighten it. I can't bend it. It hurts. It's still swollen. It's time to. I was literally.
Well, good luck.
I
hope you get decent news. Maybe they can splint it or something. It'll be good to go.
Yeah. Fingers crossed. All right, James. Good to see you. I will see you soon.
Take care, everyone. Cheers.
Bye. All right, folks. That's another episode of Expat Wealth under our belts. Thank you for listening. I appreciate it, and I appreciate you. If you're enjoying the show and would like to support the mission, which is to help ambitious expats thrive in America, I'd ask you to subscribe to the pod wherever you listen, and also consider leaving a rating and review. This stuff really does matter. Please help us get this information to the people who need it, that is, to your fellow expats. Just a quick reminder that this show is brought to you by Plan First Wealth. We are a US-based financial planner and wealth manager, and we help successful American and international families living across the US to make the most of their opportunity and ultimately to retire happier. If you'd like to know more about how we might be able to help you, you can find us on our website, www.planfirstwealth.com, or you can look me up on LinkedIn. Do get in touch. We'd love to hear from you. As always, thank you to the podcast guys for their help producing this episode and the entire show. See you next week.